Good morning, traders. Manny Cabrera here from MDC Trading Academy with today's pre-market forecast for Friday, May the 6th. Let's look at our news items for this morning. We just received the unemployment information. The unemployment rate ticked up point, point, 0.1%, 0.1% above what was expected. What do we have here? We have averagely hourly earnings actually dropped a tenth, and non-farm unemployment change also increased rather than the expected 390. So let's see the effect on this market because the bloodbath continues in this market. This market has been on a nosedive for quite some time. Remember, we had 3 recovery days since the new all-time low of the intraday of the new yearly low at 4081. Market recover, but we have that huge reversal day on huge volume. Look, ATR over 100. We're averaging 1.6 million. These are huge numbers for this type of market, but as long as we remain below this 200 SMA and inflation continues to saddle the economy down, this is what we're expecting the market to do, and we're going to be in this for quite some time. So you have to have a clear plan, a clear strategy, and you need to execute this plan accordingly. These are not type, even though a lot of opportunities or a lot of what they call so-called opportunities seem to present themselves, this is when you have to become a sniper. If you're a sniper before, you got to be a sniper on steroids right now. You have to keep your eyes open for those pristine opportunities within this quagmire of information and movement. You have to be very delicate, very precise, almost surgeon-like, and execute your plan flawlessly. Plan your stops, your entries, your exits clearly within this market. Do not fall in love with either side. Wait for the breakouts before you start pulling the trigger. Let's look a little bit closer behind these numbers as we go to another time frame. As you can see here, basically after this huge drop that we had, after this huge recovery, this is a recovery, 3 days of recovery. Here's the huge drop, pretty much consolidating between these two areas here. Just basically consolidating. The market cannot remain there. It was there before, broke below, then it came and recovered. Now we're back here again. You have to wait for this market to decide which way it's going to go. It has to make a break one way or the other. Now, clearly, the new low of this year is looming right below this area here. Any break below this area, it's going to be a bloodbath. You're going to see a sell-off like we haven't seen in quite some time, and we've had some pretty strong sell-offs so far this year. Let's look a little deeper behind these numbers as we look at our analysis chart. Remember where the market came from. The market, this is intraday high. The market completely tanked from way down there, and it got into this tight range right here. This is the range that we find ourselves right now. Here's the range right now. This is where we find this is the intraday high, intraday low. Market is clearly, this is all based on unemployment news, retesting this resistance there. If I'm looking for longs, to be honest with you, I'm looking for a breakout above this. Any shorts that I'm looking for, I have to look for, to be sure, anything below here, unless you find a very tight and clear substructure within here where you can put a stop in a good place, good healthy place for protection. But other than that, guys, this market is going to keep chopping between these two areas indiscriminately for a long time, as long as it remains between here, and long time remembers relative to these time frames. But ultimately, we need to see a break. We need to see a break above here. This is how I would play this: a break below here, the intraday low, or clear break above this current resistance area in order for me to start thinking about even pulling the trigger in any other direction. Hope this helps, guys. Hope you have a great session and a great weekend. Take care.